Welcome back. It's a big day of trade lined up. It's in fact one of the biggest weeks, if not the biggest week for financial markets, as we have the union budget coming up. It's the penultimate day before the big budget, so lots to reckon with. The SGX Nifty is going into the budget and going into the, the Adani Group clarification very, very quiet. So let's see which way it goes. But a lot of stocks to, react to their earnings today. So let's get straight down to that. Good set of numbers coming in from Bajaj Finance. Abhishek has the latest. Abhishek, over to you.
Well, Sonia, it's an inline quarter for Bajaj Finance. The new loans is at all-time high of 78.5 lakh, up about 16% on a sequential basis. The AUM mix shows that they are slowing down in the mortgage portfolio. However, consumer, SME and commercial still continue to drive the loan growth on a robust basis. So calculation shows that net interest margin have expanded on a sequential basis, but it's down on a YOY basis. Gross NPA, that is under control, coming in at 1.14%. When compared to 1.17% in the previous quarter, and restructured book is at a mere 8 basis point of the loans versus 10 basis point in the previous quarter. Return ratios, they remain healthy and they continue to improve both YOY and quarter-on-quarter, and PNL, both the NI and PAT largely in line with our estimates. Back to you.
All right, thanks a lot for that, Abhishek. Well, Vedanta is the other stock that will be reacting to its numbers, and if you look at the numbers in comparison to our poll, well, it looked better. Keep in mind that Hindustan Zinc's numbers are already the price across around 35-40% of the EBITDA number was already known. But in terms of the numbers, they look good. A couple of observations out there. Normally, you look at the segmental breakup between the aluminium, the oil as par in international zinc, and on almost all those businesses, it looked much better than what we were working with. A couple of observations though, in the oil and gas business, it looks like a big beat. However, the beat is to the tune of close to around 200 crores, and I say that because the windfall tax of around 330 crores, it was taken as an exceptional item. The other two factors were they declared a dividend yet again of 12.5 rupees. Year to date, the dividend goes to around 81 rupees odd, and on expected lines, since they're paying out more dividend, the debt number moves up as well, going with a tinge of green on Vedanta. But Vivek's back with us to tell us about NTPC. Vivek, how are those numbers?
Well, good morning. It's a very strong operational quarter from NTPC this time around. It's an operational beat. Both demand as well as generation growth was quite strong on a year-on-year basis and even sequentially. And, quite heartening was the fact that there's been a strong improvement as far as the JVs, the joint ventures that the company was operating with. Now, better realization in terms of the pricing and also lower fuel costs is something that has actually gone ahead and aided the operational beat. Now, focus now mainly shifts to the consummation of the renewable deals platform. Remember, the management already told us earlier that they're looking to consummate this particular deal by the end of March 2023, looking to offload almost 10 to 20% stake in that particular platform. Looking at the core numbers, across all of the parameters, it's a beat to the CNBC-TV18 poll. Standalone revenues up almost 37%, profitability up 5.5%, EBITDA up 36%, and margins quite strong at 32% on a year-on-year basis. One important update, the Joshimath project work has now been stopped, and the next date of the court hearing is May 2023, is what the management indicated in the con call.
Okay, thanks a lot for that. So we'll keep an eye out on all of those stocks. But there are some more smaller, names that could be in focus. Kajaria Ceramics is something that Mangalam is looking at. He's also tracking Godfrey Phillips. Mangalam, good morning.
Good morning. So poor numbers coming in from Kajaria Ceramics. Asian Paints numbers told you that, this time around there will be weakness for all the home improvement names. And it starts from the top line itself. A 2% growth in the revenue, just a 1% decline in their volumes. Led to an EBITDA decline of almost 28 odd percent. Margins compressed by 500 basis points because higher power and fuel costs did not aid their cause. And as a result of which, the net profit fell by 41%. See red on Kajaria Ceramics. As far as Godfrey Phillips is concerned, the tobacco business of the company did well. In fact, we did see a margin improvement out there as well. But importantly, their other income also, which was on account of them having sold their chewing tobacco business, led to a 35 crore exceptional gain, as a result of which the net profit came in at around 78 crores versus 27 odd crores. So good numbers coming in from Godfrey, poor numbers coming in from Kajaria.
Okay, all right. Thanks a lot for that, Mangalam. Well, Vahista joins us to tell us about BEL and Data Patterns. Morning, Vahista.
Good morning, Nigel. Well, I'm going to be talking about the defense pack, and Bharat Electronics has reported numbers which are more or less not match the estimates. In fact, only the revenue, which is coming at 4,100 crores, is exactly bang on the CNBC-TV18 poll. There was a healthy execution of the order book, which led to a 12% year-on-year jump in their revenues. But what has been worrisome has been the decline in margins. The estimations were at 21.9%, but the actuals have come in at 20.7%. So that is something that the street will look for. The order book, as on the 1st of January, is at 50,100 crores. And the management had earlier guided us for a FY23 year-end order book of 60,000 crores. So I'm going with a red on the stock for today. But there's another stock which I'm looking at and has posted some excellent set of numbers. Also from the defense pack has been Data Patterns. There's been some really good numbers coming. In fact, the current order book is at 890 crores and they're expecting additional 125 to 150 crores of orders in the ongoing quarter, that is Q4. There's a new manufacturing facility which is also expected to commence in Q4. The revenues have jumped 155% on year-on-year basis. The margins have come in at 42% in this quarter versus 36.4% in the same quarter of last year. And the PAT has also jumped by nearly 250%. But what we'll be looking forward to is that earlier the management had told us that they're looking for 25 to 30% growth in the revenue growth, which is something we will be looking for, whether they can achieve that target or not. Also on the margin front, they were expecting upwards of 40%, but in 9 months, the margins have been approximately 36, 37%. So that is something that we'll be looking forward to. The management is coming on air in the next 1 hour or so. Back to you.
Okay, thanks a lot for that. Very good numbers from Data Patterns, and their manufacturing capacity is also going to be doubled Q3 onwards. So we'll of course get more details on that, but going with green there. But Ekta is joining in. She has Aarti Drugs and Vedanta Fashions on her radar. Ekta, over to you.
Thanks for that. I'll start with Vedanta Fashions. Revenue up around 15%. Margins have been maintained. Profit up around 17%. Same-store sales growth, however, is down 8.7% year-on-year. They expect a better Q4 because of the wedding season picking up. Aarti Drugs, I expect that stock to probably be in the red. Revenue up 5%. Margins lower year-on-year. Profit at 36.68 crores compares to 58.3 crores year-on-year. Q-on-Q, revenue lower, margins have been maintained, but profit is marginally lower as well. So overall, a bit of a sluggish quarter. Expect Aarti Drugs to probably be in the red. But just remember that the company is looking to double its capacity in the specialty chemicals business. So watch out for that.
All right, Ekta, thanks.